Afternoon, everybody. Thanks for having me. It's my first conference and first time speaking. I was pretty excited to come down here today and speak. I'm Canadian. I don't know if y'all can pick up my accent, but I was excited to get away from Canada, from the truckers, honk honk, and avoid the snow. So I appreciate y'all having me here today. So my name's Aaron. I'm part of the Luxor team, part of the BD team, in charge of the BD efforts primarily in North America. Just want to go through a bit about what Luxor does. I'm going to go through a company overview, just super quick, some of Luxor's products, but I want to focus on our hash rate index product that we have, which is basically an open source product that our team built for the community and the Bitcoin mining industry as a whole. So we'll go through that as a focus here today. So what is Luxor? Luxor is primarily, and what we're known for is our mining pool, Bitcoin mining pool. Currently with about 6.3 exahash under management. At any given time, we have about 100,000 workers connected to our pool. And to date, we've given out about $500 million in mining revenue. Just a bit about the core team and our co-founders. So Nick Hansen there on the far left here. Ex-Salesforce, himself and Eddie Wang, our CTO, was basically the brains behind our mining pool infrastructure back in 2017. Ethan Vera, I won't call him out, but he's in the crowd today, our CEO. So I would appreciate a big round of applause at the end of this, so my boss sitting here doesn't fire me at the end of this. He's in charge of our operations, ex-Goldman Sachs and RBC. Eddie, as I mentioned, our CTO, really on the back end and dev side. And then Guzman Pintos is really what we call the hash rate index guru. It was his brainchild 2 years ago, and he really brought this to light. And he's our chief product officer, implementing all the various ideas and feedback that we get from the community as well. The newest team member for the core team is Alex Brammer, our VP of Business Development. He joined Luxor in early 2021. Unfortunately, he couldn't be here today, so I get to fill in his big shoes. So just quickly on some of Luxor's products, like I said, we're primarily known for the Bitcoin mining pool side of things. We do operate other mining pools as well on the Ethereum and the Equihash stuff. I won't get into that, but for fear of being skewered, I understand this is a Bitcoin conference, but if you want to talk about it later, we can do that. On the mining side, we do have our mining advisory services as well, which is basically a complementary product to what we are as a mining pool, just helping basically clients, regardless of size, navigate the Bitcoin mining landscape, and that's everything from connecting to our pool to procuring transformers, containers, ASICs, and that's how our Luxor brokerage business came to be as well. We do a bit of self-mining. Primarily on the R&D side, being a mining pool operator, obviously there's a lot of nuance with the ASICs that are in the market. So there's a lot of R&D that we do to ensure all those ASICs and those new models that come out. Unfortunately, that new miner that's been circling around Twitter isn't here today, but we do a lot of R&D around that as well. So I touched on it this super quick earlier. The Luxor brokerage is our newest business line. We buy and sell ASICs, and that's led by Lauren Lin, our operations manager, who's based in Chicago, and her team is actually primarily China-based over in Shenzhen. So we've built out a vast network of secondary market ASIC kind of brokers where we're actually able to kind of be a white glove service to any sort of client, small or large, trying to navigate that gray market of ASIC brokerage. I'm sure you've all been in those Telegram channels that are just sketchy as anything, trying to procure ASICs. We've kind of formalized that and just make it really easy, really super simple for anybody wanting to procure ASICs. So welcome to hit me up after, and we can talk more about that. And what we'll talk about today is the hash rate index. We recently relaunched this prior to January, so what we call hash rate index 2.0, and this is kind of what we'll focus on here today going forward. So when you go to hashrateindex.com, there's really kind of 5 buckets that we've kind of grouped all of our data and insights into. What we're kind of known for is this rig price index. as well as the hash price index charts. That's what you kind of see all over Twitter and retweets. We've kind of built out some other information around mining co-locations. We're currently building that out. It's still kind of beta. But through some of the partnerships we have, we've kind of built out kind of a database as to co-locations with space and whatnot. In the recent release that we did prior to Christmas, we've included ASIC reviews to kind of complement the rig price index, as well as just creating a one-stop shop for any sort of ASIC information and specifics. We'll get into that shortly as well. And then the new addition in Hashrate Index 2.0 is the stocks. So what we've basically consolidated all of the public stocks and public codes that are out there, as well as their, all their data that you see on something like Yahoo News or whatever, and consolidated that. We've created the mining stock index as well. So jumping into the hash price index, this is, like I said, what we're primarily known for. So what we've created is basically two charts here, so USD per terahash per day, as well as BTC per terahash per day. What essentially mining pools are, we are a buyer or a refinery of hash rate. We're essentially buying your hash rate at a slight discount to what you'd sell it up on the open market, and this is what this represents right here. So I've been in Bitcoin and crypto since 2017. I used to be that guy that checked prices, Bitcoin price every day. Now, since joining Luxor, this is what I'm generally checking every day. This means we're profitable. In addition to those two charts, it's just some basic statistics that kind of follow the Bitcoin network. That's kind of all over the, there's lots of different websites on that, but basically just some kind of summarizing some stats in regards to the Bitcoin network as well. As I mentioned earlier, the ASIC reviews, we've really spruced this up when it comes to kind of providing information to clients as well as the general public when it comes to ASICs. So here you can kind of see the newly released S19 Hydro, obviously the stats here, as well as we've created or linked to industry reviews or industry expert reviews on that to kind of give some further insight as to the various models that are out there. And even 2017, looking back that far, there was only a handful of various types of ASICs, and going forward, this is just going to be a little bit more comprehensive. So we're just continuing to build that out. Some basic stats as well, or abilities that y'all can check out on hashrateindex.com. Setup guides just for connecting to a pool or just setting up that ASIC. So really kind of catering to those new miners as well. Developing just basic estimations of income, revenue per day based on your kilowatt hour, and just those basic inputs. And then, like I said earlier, those the expert reviews to kind of give you a secondary opinion on the ASIC that you're looking at. Rigpriceindex.com, this is probably our favorite and what we are most well known for in addition to the hash price. And what this is a bunch of data points that are collected from over 5,000 sales kind of data points through Telegram, WeChat, manufacturer's website, as well as our own ASIC brokerage businesses. What we've then done is, you can see down here, is group those into efficiency bands, essentially. So above 68 joules per terahash, that's what we call your old gen equipment, so your S9s. The 38 to 68 joules per terahash, those are your mid-gens. So your S17s, M20s. And then your new gen equipment, under 38, your S19s and whatnot. So what this essentially allows anybody to really do is correlate, obviously, the ASIC prices to hash price, as well as identify buying opportunities so you can deploy your capital efficiently. I think the biggest one is, the big China migration is what you see right here, right? This chart obviously isn't updated as of, we built this last week, so you probably see a slight increase on some of these prices here in the next couple weeks as prices kind of recover, as Bitcoin hopefully continues to go up. 44K today, I believe. I say I don't check price, but I guess I do. So that's grouped by efficiency, as bands. We've also built this. So this is actually individual ASIC prices. So you can't really see it up here, but S19 is what we've chosen here. So just on an individual kind of data point, we've pulled all that in. And for all the, I'm sure there's not any fiat maximalists here, but basically what you see is a trending decline in the price, the rig price in BTC, and obviously the increase in USD value here. And obviously that's just over the past year that we've seen that. Just as prices for, say, an S19 have essentially gone from, call it 2,000-3,000 USD to probably a peak of, I think, 12,000 USD on secondary markets. So. One of the benefits of being in BD, there's a lot more smarter people than me that we hire for the content and the research side of things. Colin Harper is our lead content, director of content. And every year, we have the privilege and also the challenge of putting in what we call the hash rate index year-end report. And this is anywhere from about a 60 to 80-page year-end report where we actually consolidate all of that data that we accumulate through the year on ASICs. And we kind of present it in a easy-to-read format that summarizes some key insights. And through things like the ASIC brokerage business, as well as tracking all those data points and scraping that data, we're actually able to develop some pretty cool insights. So one of these being using a macro event like the pre and post China ban, we can track month-over-month change in rig price. So to kind of summarize this slide, basically what we saw pre-China ban is the ASIC prices you can see here, depending on the model, would track BTC pretty closely. As BTC ran up to 60 plus K USD, the prices of those ASICs followed. When the news of the China ban came, very quickly you could see those prices start to decline, which is kind of to be expected. Nothing really sexy there. But in the next slide, I'll show you where that kind of comes into play in the futures market. But basically, just even through ASIC prices, you can actually track the price and trend changes in Bitcoin in the broader market. So Yijing Wan is our data analyst, who's a primary input into a lot of these charts. She's analyzing this on a daily basis, specifically on the ASIC side of things. So to kind of further get into some of what we saw over the 2021 with the China ban is when we're looking at premiums for spot and future ASICs. For those that don't know, spot ASIC prices are generally ASICs that are going to be delivered within the next month or weeks in certain cases. But there is actually a futures price market for ASICs as well. So these are ASICs that are going to be delivered in the 1 to 2 month range, or 1 to 4 month range, I should say. And because there's risk in taking ASIC deliveries in future, there's obviously a discount based on those, and we can see that in the ASIC market. So generally, to kind of group it, in the 1 to 2 month range, you can expect anywhere from an 8 to 12% discount in ASIC prices. When you're in the 3 to 4 month futures range, you can expect anywhere from a 16 to 26% discount. But you do carry that risk going forward. Based on variety of factors, sellers not delivering those on time based on whatever your plug-in date. So there is some risk there, and that's why that discount exists. What we saw post-China ban, or hash rate migration from China, is very quickly you can kind of see kind of a blip here. And then what we saw was in the 1 to 2 month time frame, we saw that it's a typical 5 to 8% discount. Nothing really new there. It fluctuates, but interesting enough, in that 3 to 4 month time frame, we actually saw a 5 to 8% premium, which is highlighted here. And how to really chalk that up is the premiums in the ASIC futures kind of hint at current market bottoms, is how we really sum that up. So to kind of further elaborate on that, the buyer is willing to pay premiums for future orders, possibly when they can't plug in spot machines. So essentially, what you can roll that up to is ASIC purchasers bought the dip. Essentially what happens there is they took advantage of the China migration, as we saw on the previous slide. They said, I want to buy futures orders. It caused a premium to occur in the future ASICs orders. And for any keen eyes in here, we generally saw that dip in the April, May, June time frame on the spot prices, but you can see here the premium started to increase come June, July, August. So. One of the other things we have on hashrateindex.com is the crypto mining stock index, a bit of a mouthful. So this is where we've consolidated all of the pubcos. It seems like every week new Bitcoin miners going public. So we've consolidated all that here, and we'll continue to add to it. It basically is just an index that tracks all the pubcos, and then we further categorize those in a manufacturer and miner category to further get some diversification and specification there. As a result of kind of focusing on some of the data points on public miners, we've been able to kind of develop some metrics, and this is just one of them. So for those in the room, Bommy Investor, he's on Twitter. He's a recent new hire. I won't dox him. He's a fellow Canadian like myself. He exists. I had beers with him before I came. He's developed what he calls the price to HODL ratio. And basically, it's a metric that measures the market cap of any public miner divided by the Bitcoin holdings that it has on its balance sheet come the end of the year. So this is actually a yearly metric. You can see the ratio here. It can further be used at the weekly and monthly level as well. There's nothing that needs to be changed there. But basically what he's saying is when we look at the pubcos, such as Hut 8 and Bitfarms, the low ratio Bitcoin mining companies are likely undervalued when you compare those two metrics. The higher ratio, something like a Riot or a Marathon, has a higher ratio because the market is essentially pricing in future ASIC orders and future capacity that they're building out as well. Very simple metric, but it kind of gives you a status of the pubcos that are currently out there. If all of these articles, that I've kind of gone through today, whether it's Yijing, Colin, and all these guys here as part of the team, these are all on our blog on hashrateindex.com. There's no price. We don't charge anybody for it. It's just kind of our way, being a mining pool, to kind of contribute back to the community and just continue that open source kind of methodology and mentality there. So, and we'll be continually iterating on this as we go along and get more data, especially on the ASIC and obviously the hash prices, Bitcoin increases. Lastly, in addition to the year-end report that we put out every December, January timeframe, we do this weekly. It's called our Hashrate Index newsletter. This is a weekly summary that Colin puts out, and it basically summarizes kind of like the weekly events, as well as pulling data that we see on Hashrate Index and kind of summarizing it for those that can't go into the dashboards every week and check out the data there. So it's free. You can sign up through it on hashrateindex.com. And it's just a good source for getting anything ASIC, Bitcoin mining related. It'll kind of summarize it and kind of give you the tidbits of what you need to know there. So that's all I have as far as the Hashrate Index. It's a bit about me.